Good morning, everyone. I hope you're well. It's Duncan here from Tradeify, Coach Dunk. So just filling in for the guys, keeping the seat warm for another day. Oh, I've left the line. There we go. So yeah, I'd left the speech running on the live stream, so I was hearing myself as I was talking, which is never a good thing. But yeah, so as I say, Nick and Celine still moving. Nick still traveling with the rest of the guys from TTV as they celebrate the 1 year. So guys, for those of you who don't know me, very quick overview. So my name's Coach Dunk. I'm a trader for a fund. I've been an institutional trader for 30 years. So I'm just going to give you a bit of a run through on the markets this morning as we come into a new day. Obviously the week's been all right. As we can see here, yesterday the S&P up 0.13, NASDAQ up just a fraction. The market's still kind of being pulled up by AI, really, in terms of developments in terms of the Middle East, etc. Then obviously it's still been tricky. We're not really progressing in any way. In fact, yesterday we heard from Iran that they were no longer entering into the conversations. Obviously, that was quickly quashed by President Trump. So he was saying that the conversations ongoing as recently as yesterday. So we remain optimistic on that front. But for now, as I said, AI is just dragging the market up. Some really big name moves. We'll go through them all. Well, not them all, but we'll go through some of the main ones in a short while. Let me just catch up on the chat. So firstly, chat, where is everyone? Obviously, this is my second time on the London stream, which is ironic because I live just outside London. I work in London. But where are you guys all based? Obviously, it's with this time zone, we get the late New York, with late Americas, obviously a lot of Asia, Europe. Where could you just put in the chat, where are you guys based in and around UK, Germany, and London? Cool. So a few Scotland. That's, although I don't sound it, it's where I'm from. So I've been in England 40 years, so the accent's kind of diminished a little bit. Queenstown, New Zealand, India, Canada, Jupiter, Florida. So this is a pure global stream. Excellent. Cool. Right, there were some questions before. Let me just have a look. So my new favorite Coach Dunk. Wonderful to hear. A good, nice boost to get me going. Whilst I'm more than happy talking about the markets, I still find being on camera a little uncomfortable, and I can see myself in the corner. It's just like Gollum from Lord of the Rings looking at me. But I'll get used to that. That's something I've got to get over. But yeah, every job has its challenges. So yeah, Germany, baby, India. We buy any house. Haven't got a Brummie accent though. No bad thing. Sorry, that's a bit cheeky. But yeah, when I speak to my parents, my accent is significantly different to this, but I couldn't put it on now. Right, giveaway perhaps later on. I'm not in charge of giveaways. I don't get that degree of responsibility. Sussex are getting closer to my home. I'm in Essex, right on the Essex-Suffolk border. So whilst I love London, I love working in London, I don't want to live there all the time. So yeah, I choose to be a good bit further out. Cool. Right, let's just move through. So first things first, when I start my day, I'm looking at what's been going on around it. So it's, for me here, it's 8 o'clock in the morning. I've been out in my office for, well, I got out here about 6:45 this morning. And the first things I do, although I'm desperate to get on the charts, I kind of need to get a bit of context first, just to get a little understanding. So MoFlo from a grey London. It is grey. We've had some really good weather. It actually rained yesterday. I'm getting to the age now where I actually appreciate the rain because I want my garden to grow. God, I'm old and boring. But yeah, so as I was saying, I come out and I want to see. So the first thing I'm looking at is what's Asia done. Obviously, I'm awake until the end of the New York session. Not much more. although I will be tonight because we get Broadcom earnings at 9 p.m. UK time at the US close. So for me, that's a big one. That's something we've got to be looking at. We'll have a closer look at the chart of that in a minute because I think it could be quite significant. It typically has been, especially when the market is being so driven by AI at the moment. But yeah, as we can see here, Japan had a decent session, up 3%. The Hang Seng was down 1.73%. So this is just part of my process, understanding what we're coming into. We saw the US session was just a little bit up. Certainly in Japan, we've caught up. We've got some public holidays today, actually. In fact, I think Japan are on holiday today. I know Taiwan's definitely, South Korea is definitely on holiday. Now, obviously, European session, we're not really at the starting point for that yet. So we'll see that as we go through. Start the stream by opening the charts you're leaving. I don't like to bow to demands, but yeah, let's have a look at the charts to see where we are. So the Nasdaq is just in the last minute is just pushing on a little bit. As we can see, we're trading around about let's just call that flat. So it will be interesting to see how we move on just throughout this 2-hour session as everyone starts to pay a bit more attention. Now, when I start looking at my charts, as I did on Monday, and actually this is quite pertinent. So obviously I've dove into a 1-minute chart, not my typical home, but for the purposes of exampling trades, well, this is where I go to. But when I'm, again, just like with my day, when I'm starting by looking at the news, I also don't want to just focus in on the, whilst I'm going to be looking at the 1-minute charts on here, I want to go back out. So I'll always start by just quickly pulling up the hourly. Now, for those of you who are on Monday, when I was going through almost exactly the same spiel of saying go back some time frames, because sometimes you might notice something that you miss, and this is what again, if we look at this, I went back out to the hour and it gave me this line, but look how well this line held. So when we go into the 1 minute, we're not going to see that line's gone. But when we go back, had we not placed it on a further out time frame, we may have missed the opportunity to get with this. Right, Coach, do you trade gold, Coach? Never saw you actively trading until now. Yes, I absolutely do trade gold. Gold is something I look at quite a lot because obviously in the fund, we're trading a lot of single stocks. We have to trade bonds for the longer dated stuff because we've got investors that are going to be holding for like 5 years, and our aim is to give them a kind of balanced portfolio. Bond trading side's so boring. Actually, it's been a bit more entertaining lately. But the other thing to bear in mind is gold is typically, and I mean typically, gold is really good for hedging. So going back 2 years, when I first started at this fund that I'm at now, they just said, look, we're doing stocks. Can you just hedge us? Just put a hedge on. And all I did, basically, simple as anything, I just bought gold. And obviously, it of course went well. We actually had the dream scenario because gold was appreciating and stocks were appreciating. But for me, long term and short term, I like looking at gold. So let's just chart this up. Now, for those of you who don't know me, I'm the most simple of simple traders. I use trendline break, support, resistance. That's it. I've known how to do all the more complex things. I've realized I was getting nothing more from them than what the simplicity of trendlines, break, support, resistance were giving me, and therefore that's kind of where I sit. And that's what technical analysis is. It's a matter of you trying things out and finding out what works for you. That's what I did, and that's why I am at this simple. Perhaps it's because I'm a very simple person, think very straightforward. I just find the simplicity works. But that is not me saying that the things I don't use they didn't work for me, or they weren't as optimal for me. So by all means, whilst I'm saying this, stick to what you're doing. I'm not saying don't do it, but yeah, this is my approach. So again, one of the biggest things and one of the biggest challenges when you first start looking at your charts in the morning is trying not to force a trade. It's when I go through my charts, it's a case of looking at where the lines are, and then a matter of just being patient and waiting for those lines to come into fruition. So I have, on Monday, very embarrassing, I didn't have the live charts set up because I chart on Bloomberg for my day job. I'm not allowed to use those charts on here because obviously my company pays for that. So therefore it wouldn't be very fair. And also there's some company information on there. But look, I'm just looking for simple lines, but being honest, whilst I've plotted this line, obviously we're up, we're not at the high, we're not at the low, we're slap bang in the middle. Doesn't give me a lot. Look, that line's crap. And look, this is a big thing that people struggle with. It's that desire to have to find something, to do something, to get going, and that's what can kind of force people into bad starts to the day. It comes from just looking to get a trade on, and that's not what we're doing. If there isn't a trade in the first hour, 2 hours, 3 hours, that's okay. It's frustrating, but it's okay. It's just about getting things done in the right way. Cool. Candlestick shenanigans. Looking forward to your analysis today. Thank you very much. Again, look. Let's just have a look through. Weekly range is set on Monday, Tuesday. No proper event. Next days we could stay in this weekly range. Quite possible, of course. Again, let's just keep an eye on that. See where we go. Obviously, the market is just sitting waiting for developments in the Middle East. Makes it tricky. We're in a headline-driven market, especially with Trump at the helm. Again, when we're getting these updates out of sync and out of time at random points of the day, it does make it more tricky. But if I'm looking, I have to be completely honest. If I'm looking at this chart, there is nothing at this moment in time that is drawing me towards a trading goal in gold. Let's just go out into the 5 minutes, see if that. Actually, this looks a little potential. Again, this is not. Again, I think that's the same thing. It's okay, but it's not great. If the market comes up, we get another touch on this and then rejects, then it perhaps becomes more relevant. But at this stage, that's not a touch. 2-touch line, out. Okay. Trader goal, excellent. Thank you very much. Yeah, hopefully it's just a little bit different. I mean, Nick and Celine, I've watched bits and pieces of them. Very, very good. But it's always good to just mix it up with someone a little bit different. Just all the time when we're trading, when I've worked on different trading desks, I pay attention to who's doing well on the desk, and I just look and see is there something they're doing that I could kind of potentially get a little bit more from, and that's why it's good to not just pick one person and follow that one person. Look at how multiple people are doing things. Take a little bit of a little piece of all that. So before we move on from gold, Andrea, what's your bias on gold? Look, at the moment, let's just take it out onto a slightly longer term. At this moment in time, we're kind of this is all May and June. Gold's kind of trapped a little bit at the moment because gold in this moment in time, gold is reacting well to good news in the Middle East because that would mean that it's more likely that rates would stay on the lower end. The longer things escalate in the Middle East, the more likely it is that interest rates will go up. Okay, when interest rates go up, gold tends to fall, because gold, if you hold gold, you get no yield, you get no coupon, you get nothing for it. Whereas if you use just basic money market tools, bonds, etc., you're getting coupon, you're getting gold, you're getting coupon, you're getting interest, and therefore if you're looking for stable money, then that's it. The other thing is, I want to talk gold, so dollar high. You're literally talking about what I was going to talk about. Russell Dean Harris, yeah. This was the flip side of what I was going to talk about, because don't, please, everyone, I know many of you won't know and understand this, but when we're trading gold, we're not just trading one thing, we're trading two things. We're trading gold and we're trading the dollar. Now, obviously, things go bad in the Middle East. At this moment in time, the dollar is acting as the global safe haven. So as such, if things go wrong, the dollar gets bought. That puts further downside pressure on gold. Okay, so going back to the original question, what is my bias on gold? At this moment in time, I'm just not sure. I've spent the last 18 months being hugely bullish on gold, but in this moment, overriding bias, I'd rather be long than short. But I'm less bullish than I was over the last little while. Mexican Dance, good morning. Loki, why hasn't the dollar fallen off a cliff yet? Again, we saw the dollar come back. The dollar performed well. Let's just have a look at, probably best exemplified on some currencies. This is dollar yen. So this is showing a stronger dollar. Sterling against the dollar. Again, not so much direction there. Euro against the dollar, this is lower because the dollar's the secondary currency, so therefore dollar strength means euro dollar goes down. So what we're just showing between dollar yen and euro against dollar, some of the biggest currencies in the world, we are seeing dollar strength, and until we get this MOU finally nailed on, then I think dollar strength will be the prevailing factor. Okay, so let's have a look on the NQ. Let's get off the 15-minute chart. The look in the morning is just to get the idea of what's behind the move, and that's what gives us these ticks. But let's go down to the 1 minute. So we can see we've been pushing higher a little bit. I did, just before I came on, I was looking at this line. Of course, hindsight's a wonderful thing. But a break like that is something I would like. That's exactly the sort of thing I'm looking for. The trouble is when we've got when we've got a market when we're on all-time highs, the bane is not being able to look left and going, because for me, if I had bought through there, my stop loss would have been down here below this low. Target, it's not like I can look left and see where we're going. So trading markets, Celine and Nick are off. I most certainly didn't fire them. They'll be back with you. I'm just keeping the seat warm this week while Nick's in Miami and Celine is moving to Greece. So I believe they'll be back with you on Monday. We've got an adjusted schedule, which I will share with you before we move on too far. But yeah, so looking at this, I'm literally just projecting forward in terms of my target. But to think we couldn't, obviously, if I was to put the stop on here, stop would be below here, so 36.69. So let's just call that 36.70. Entered through 15, so around about 45 ticks. I would be looking for a minimum of 130, 140 ticks on that. As I mentioned on Monday, I don't enter a trade unless I'm looking for a minimum risk reward ratio of 3 to 1. I'm always looking to make 3 times more than I'm risking. I don't always achieve that, as you would have seen on the short. I think it was a short NQ trade I took on Monday. I got stopped in profit. but the entry was good. Stop, I trailed it down, and then I got stopped out on it. But look, these things happen. Is it still on here? Actually, it's still on here. Here we go. So on Monday, let's just show where the line was. Oh, what am I doing? So, oh, sorry, that's the wrong one. I'm doing myself out of profit. I sold through here. Okay, sold through there. So the break of that trend line, the break of these lows, moved on, and then I trailed my stop loss to here, I think just before the end of the stream, and then I did get stop up. It went back down. But this is something I pay attention to, and this is why I think I said on Monday I do the trade sheets, and I take a screenshot at the end. When I trail, I also pay attention until when it ultimately does it. If I've trailed the stop loss and been stopped out, I keep a third reference point, and that is when it either hits my original stop loss, which would have been here, or my original target, which was here. Now, what we can see, what I've learned from that, is it did go on to hit my original target, and I did get stopped out. Granted, I made decent money on it. I achieved at least a 1-to-1 on it. More than that, probably 1.5 to 1. But it went back up. Now that is useful information, because that's telling me am I being too aggressive with my stops. That's really key and crucial to understand. And if I can see that this is happening to me time again, then it starts to teach me I need to be a little bit less clingy to profit when I'm in a profit. That's the wrong term. I need to be a little bit less protective when I've got profit, and perhaps just give a little bit more room, allow my trade to breathe, and then ultimately come down and hit my take profit. So whilst this was a good trade, selling through here, buying it back here with a risk there, yeah, that's not bad. That's not bad. But could it have been better? And the answer to that is yes. And if I see that repeat time and again, that triggers me to act upon it. Yeah. Okay, right. This market's beyond a joke now. It's like it's too darn scared to fall. Yeah, it does. It does have a feel. Do now, because of that, we're just being dragged up. If we have a look at some of the, I'm looking at the video on a 1-minute chart. If we have a look at what's been going on, just take it out a little bit further. Just to look at it in overview. We've had Nvidia bursting up. Let's have a look at Broadcom. This is a 15-minute chart. Actually, it's just fallen a little bit. But this is the big AI names are what's dragging this market up. More buyers than sellers in these, and quite simply, and it is literally just being dragged up. As I say, tonight could be important. Obviously, we had Hewlett Packard on Monday, came out, beat EPS, beat revenue, didn't quite entertain the market. Yesterday, Palo Alto, again, wasn't so good. Today, Broadcom, $2 trillion company. This will be important. It's been up, I think it was up like, when I logged in this morning, it was up like 10% on the week. But one of the bigger movers, let me just pull it up, this week, I don't know if you guys, I can't remember the ticker. Marvel, how could I forget that ticker? Marvel, look at yesterday for Marvel, 32% up. Jensen Huang, the CEO of Nvidia, came out and said it's going to be the next $1 trillion company, and that fueled it 32%. Which obviously he's a brilliant man. He's very intelligent, built a successful business. Does it warrant it going up 32%? Him coming out with that statement seems a bit strong for me. Also, if you factor in the fact how Marvel and Nvidia are intertwined, this kind of circular investing that goes on, again, it's just a little bit can try. It's like me saying my football team, Scotland, are going to win the World Cup. Of course I'm going to say that. I'm a Scotland fan. Doesn't mean to say it's so. And I've got a new name, Unk Dunk. I guess my age lends to a more senior role. So if you have time, can you go over an NFP and what I expect? Absolutely. I'm definitely planned to do that. So perhaps we'll go for that. Robot, good morning to you too. Okay, right. So, sorry, I got distracted from talking about, but really, when I was answering the question of why are we not going down, it's pure buying from that side of things. But as Andrea pointed out, we do have payrolls coming up this week. That brings interest rates back into the equation. That makes things a little bit more interesting. Another thing flowing into it. A few little bits of data. Least Scottish sounding person I've heard in a while there, laddie. Yep, no, absolutely. I'm sometimes, that's why I don't like hearing my own voice, because in my head it's very different to this. But yeah, okay, so in terms of the NASDAQ, let's just go down onto the 1 minute. Does this look different to what I was looking at a minute ago? Right. Okay. Let's just get rid of this. This isn't, again, not great. It's all about being honest with ourselves. 1, 2, pushing at 3. Therefore, I'll put it on there, but I'll leave it on there just in case the market comes up. And so, if we break through that line, would I take it? Being honest, not really. No, but I'll leave it on there just in case the market comes up and we get that another touch. Fried chicken, good day to you too. Good morning. Which setup do I have at home? 1 screen and 3 charts and a laptop with Tradeify and the iPad. Pretty decent, to be honest with you. That's not a bad setup at all. Well, for years and years, I never even conceived it would be possible to trade from home. In fact, we were like, basically, when you work for a bank, you're not even allowed to, the only thing I was allowed to do was take profit when I wasn't in the office. I wasn't allowed to move a stop loss. I wasn't allowed to do anything. Everything had to be done in the office. And then obviously COVID hit, we all got chucked out. And at that time, they just sent home my work setup. So I've got 4 screens. I've always had 4 screens for about 15 years. And some massive gaming PC, which apparently is faster than, because I run a lot of news streams, Bloomberg, etc. A lot of the platforms I have that I need to have the highest, I need to have the highest latency that I possibly can have. So I just use what I'm given. People who understand it far more than me, they will know what's best and most optimal. But I've had this a while now. It's actually quite old, so I'm not really. I should probably be updating it or something. Cool. Right. Let's just come back through the questions. Question: how does big macroeconomic considerations affect one scalper like me? Look, we buy any house. Look, that's a brilliant question. When you're scalping on 1 and 5 minutes, do you need to be fundamental? Right, 2 questions. Do you need to be economically excellent? No, absolutely not. Do you need to be economically aware? Absolutely yes. Now, what I mean by that, if you're scalping on 1 and 5 minutes, the minimum you must have is the ability to know when you should and shouldn't be doing it. Okay, so that is the first thing you need to consider. So another one of my first jobs of the day is looking through the calendar, looking for the news in the areas. Now, obviously, if you guys are just trading US indices, then be aware of what we've got. So today you'd be looking at the ADP. So this is effectively, we've got non-farm payrolls on Friday. ADP is private payroll. Non-farm payrolls is public data. So at the turn of last year, when we were going through the challenges with the government shutdown, we weren't getting that data. The only data that we were getting was private sector. So is it as important? Is today's ADP as important as Friday's? No, it was way more important at the turn of the year when we weren't getting any meaningful data on employment. In this day and age, it's not as important. But if you're scalping 1 to 5 minutes, would I advise being out of the market when this data comes out? The answer to that's absolutely yes, because you're trading based on charts. And suddenly when you get a big, it's not even, although they're giving it red news, I don't count it as such. But again, if you're in it on that, you're just gambling, because you're trading using technical analysis. And then if this comes out, if it's good, if you're long, it's good, you win. If it's bad, you lose. Again, to me, that's not trading. ISM, ADP today, if I was scalping 1 and 5 minutes, I'd sit back out. I'd give the markets 2-3 minutes, then I'd come back into it. I'd let that number noise get out of the way, then get back to what you're doing. So the first stage to being good at fundamentals is understanding the fundamentals. Understanding what's coming out, what you should be aware of, when you should be out of the market, when you can come back to the market. So as a rule, have a look at this on a daily basis. Have a look at what's coming out, what could affect the markets. But in answer to the question, webuyhouse.com, what was I talking about, UK. Yeah, so if you're just being a technician and just trading the technicals, Fried Chicken United fan, no. Aberdeen, underpinning my Scottish credentials, I've not picked any of the glory hunting major teams. I've stuck to the team where I'm from, which is painful at times. But yeah, when you get a glimpse of good, which we got last year, it's wonderful. Right. Are people managing 401 with a target fund like you manage your funds for clients by actively trading daily? In terms of the 401 side of thing, that's state side thing, I'm not entirely sure what you mean. With target for, again, like I say, I'm not entirely sure how to answer that. How do I overcome age-old problems of taking profits too soon and holding on to the losers for too long? Now, on taking profits too soon, if we go back to what we were talking about on the NASDAQ, where has it gone? The other day, of me taking that profit too soon, then it is something I analyze. It is, especially when I go on to when I trail too aggressively. I'm always looking at that. In terms of if it hits my initial target, then that's not too soon. Also, just to, I very, because I'm quite aggressive in how I trail my stop loss, how I try and protect money that's made. More often than not, definitely more often than not, I am stopped out in profit than I take profit, than I actually hit my target. Because as it gets closer to my stop loss, I'm trailing it in. And then obviously at times we're going to see the pullback, but my trails are always locking in a profit. Now that is, like I say, that is something I have to analyze, because whether I'm doing it too much. In terms of the other side of it, holding the losers for too long, I don't see that as a problem. In terms of, because one thing, I very, very, very seldomly exit a trade when it's against me, because my decision making, look, I'm going through these charts now. Let's just tidy up a little bit. I have a look around. Okay, this could be a bit more interesting if we're going really short time, because when I'm setting a stop loss, my entry is a good technical level. My stop loss also has to be a good technical level. So I just and this is something I think we have to do. Once you've set that stop loss, just believe in it. When a trade's going against me, I never go, not quite sure about this, click out. Again, I'm confident on my entry. If we get close to my stop loss, I was confident of my stop loss. It's a good technical level. There is strong justification for why it is where it is. So therefore, I don't tinker when it goes against me. I just don't. I've never really have. The only time I'll do it is if a big piece of news comes out and I'm quick and I can quickly go, do you know what? That's against me. I've got to click on it. And that's why it is important to keep on the news. Interpretation of news and reacting to it, that's a skill you're going to have to build at. And that's why you need to stop strengthening your economic understanding. Start by being, as I said a minute ago, economically aware of what's coming up in a day. The other thing is when we get big moves, like for example the one I just showed you, what was it again? Oh yeah, Marvel. When we see big moves, when gold dumps, we have downtime as traders. Go away, think, what caused that? Use AI. Go, S&P's just fallen 1% in the last hour. What was the cause? Again, get to the bottom of these things, because once we can understand history, we can start using that to kind of help predict the future. But these things don't happen on their own. They come by you taking yourself out of your comfort zone and going away, looking into things, studying things, and seeing if we can get an answer to understand it. Now, I was going to say there's a line down here. Now this is where we're going really short. Oh, God's sake! The minute I say about it, the market goes through it. Let's actually take this down. Oh no, I need to upgrade to see it by seconds. I won't be upgrading. I'm not. My desire to see it in that won't even let me go down even further. I'm most certainly not upgrading that one. But yeah, so the reason I like this sort of setup, we've got arguably multiple touches on the way down, an obvious place to put a stop loss, an easy place to put a target, simplicity in trading. Typically, the minute I went to plot the line, we pushed up through. But yeah, let's just have a look around. I think there was something in the Dow this morning when I was briefly having a look through. Again, a reason I like this sort of thing. We can have an entry through here, stop loss here, target. Don't need to be greedy. Right, just shy of my 3-to-1, but again, let's keep an eye on that one. I would take that trade. Arguably, I could be a little bit more greedy on it, but yeah, this sort of thing is the sort of thing. So let's just keep an eye on that. This is a trade I would take. So again, setup's quite simple. Do I want to be a bit more comfortable and have my stop below that low? You know what I was saying a minute ago about the stop loss has to be meaningful. Again, I could potentially be a little bit more greedy on my target. Arguably, that is a better trade, because I'm not just taking into account the most recent low, I'm taking into account the second most recent low. That gives me more chance. So you know what I was saying about when we come down, I can go, it's all right. It's all right. We've bottomed out down here, not just once, twice. We've got a further one. So we could either bottom out here, we could bottom out here. And again, even though it's against me, I was about to say I'm relaxed. I'm probably not relaxed, but I have good reason why my stop is where it is. Okay. Right. Good. Jaldeep, good morning. Andy, good morning. Right. I'm just catching up on this. Right. Massive. You say I'm running. I don't know. All I can see is that I've got a box that is about that by that, and it says gigabyte on it in multiple colors. It looks fairly impressive. Put it this way, when we moved house, the removal guys were like, oh my God, that's the best gaming PC I've ever seen. What games do you play? And I had to tell him the only game I play is Wordle. So I don't think he was impressed by that. Knock my door, good to see you too. Trade copy of the trade that Tradeify recommends, I don't know. Again, you'll have to ask one of the other guys on the stream, not something I do. I've been looking to trade oil futures, but I don't know where to start to learn. I'm currently an NQ trader. What would you think I look at in the oil futures market? To be honest with you, I genuinely avoid oil. I always have done. I've never taken an oil trade. I follow the oil market because you have to, especially in times like this. Going back a year ago, I paid little attention to the oil market. I don't like the oil market because it's so easily manipulated. Well, one country can just hold back a bit of oil, push, or a group of countries can get together and hold back a little of oil. It's not. I find it manipulative of oil. But the one thing we have to say is, does it present plenty of opportunities? And it most certainly does. In times like this, there's some great opportunities. But if, just like anything, just because I said I don't trade it doesn't mean to say it's not worth trading. But in terms, let's just have a quick look at the chart. Let's take it out onto start on a 15 and then bring it in. Again, there's an okay downtrend line that'll look a bit better if we take it down onto a 5 minute. So yeah, we've got the argument for, again, it's not great. Not dissimilar to the trade I was talking about. Was it in the Dow? Yeah, in the Dow. Very, very similar looking. In fact, as I've just come back on here, we're coming down, touching these lows here. So this setup, I would still be live, but if we start to break through these lows, that's gone, and that analysis just gets deleted, and we move on. The other thing to say is, why didn't I take the short when we came on this level? Again, that's something because I prefer the breaks of a line, but when we see something like that where it comes up to the line and reverses, yeah, I do feel a dick about it. But look, that's the way it goes. Okay, so going back to oil, yeah, I'm not gonna offer you really what you want there because I'm not an oil trader. But look, let's look at this on a 5 minute. This is good. Yeah, I really like this. Okay, so for just as an example, and look, is short oil a bad thing to have with what's going on? Or an entry to short oil, I should say. Having entries out is something I often do because so I would be looking. I'd want to see a break of this line. I'd want to see a break of this low. So for example, I could put my entry here. Target could be quite aggressive down here. Stop. Let's just scroll that out and see if I'm missing anything. Stop just above those highs. Now for me, that is decent. I like that. I would take that. Sorry, that stop is above that high, isn't it? Yeah, just get it a little bit above the high. But yeah, look, this is just simplicity. It's just the other thing I like about this trade is this is there to catch any positive sentiment in the Middle East. Then we would see oil drop. The danger is when you get into the trade. Once you're in it, you could be coming along nicely, and then suddenly we get US drone strike or ship captured or ship attacked. All of these things. This is the vulnerability of oil at the moment. So I'm not trading this direct run, but again, as an example of a setup, that is pretty much spot on. of my ideal type setup. Obviously, I'd like another touch in the middle. That would make things a little bit better, but that's what we're doing. So let me just catch up on the chat. Tell Spudnik to get out of the trap. That's a good point, actually. Let's have a look. Now, obviously, we lost Nick from we lost Swiss Nick on, what day is it today? Wednesday. We lost him on Monday. I think, let's just have a look at how we got on before we come to the all-conquering Spud. So yeah, Nick was captured, but look, he was captured. He was green. He was green. He was up. His opponent Diego Olivier had a really good day. Look, I said this on Monday. The expectancy. I think, what are we on now? Is it day 6? The expectancy to make money every day for 6 days. That's really impressive. So Nick would have got through at least 4 or 5 up days in a row. He's really impressive. But Diego Olivier had a very good day. I do think, I had a little look at this before I came on. I think Diego Olivier actually went out yesterday. But, oh, sorry, I didn't mean to press that one. This one. Let's have a look at the Outlaws. So from the Tradeify team, Spudnik remains in. But he's a little bit down today, but $11, nothing. But if we have a look back, how did he get on yesterday? That wasn't yesterday, was it? No, here we go. Oh, he got through yesterday by being the least bad. But again, all you got to do is win. All you got to do is win. And he's progressing well. So I hope he keeps going. I'll be honest, I don't want an outlaw to win. I want someone to have their moment and win it. But I want to see Nick push along to the final. And I hope that his heart and his stress levels, because anyone who's seen him on stream when he's in it, wow, that's full energy. Is there anyone just put on the chat? Anyone here still in the competition? And for those of you who entered, went out in the early rounds, don't take it hard. I mean, I've been trading a long time. People lose money. I lose money frequently. The most important thing is when I make money, it's good. But a competition like this, you're just being judged on the day you don't make as much money, or the day you lose a little bit less than someone else. Sorry, lose a little bit more than someone else. Again, it's obviously a competition's a competition. Everyone wants to win it, but just falling out of it early doesn't make you a bad trader. It just means you had one of your bad days came on a day where it mattered in the competition. So I wouldn't read too much into it. Misty, you lost yesterday. I'm so sorry to hear that. But look, be proud. I'd be proud to get to the stage you got at yesterday, because I'm a good trader, but I do not make money every day. Keeping it going for 5 days, as you must have, is really impressive. Yeah. Cool. Right. Let's just have a look. Do you use different software tools, Bookmark? No, I don't. I really don't. Look, what you're seeing, I don't use TradingView. What I'm showing you here on this chart on these charts are exactly the same way. I'm so simple. Again, it's just a matter of, I find this way works for me. I don't do anything over smart. It just works. I saw the short selling up in NQ, but I'm just interested in counter trend lines. Just not interested in the counter. Yeah, it's hard to buck with the trend. The reason I like trend line breaks is because momentum's with me. I'm less keen on fading into a line, going short ahead or long ahead of a line, because at that point, it's like saying, this is the bottom. I am calling the bottom. For me, it's harder. You are physically standing in front of a moving train. That moving train, more often than not, is just going to go straight through. And therefore, I'm not saying I don't trade ahead of lines, but I'm less likely to do it. Let's just catch up on the chat. So Spud is immortal. It would seem so, but let's see how he goes today. as saying, right. Arnold Prunier went out an early stage, but got 2 payouts. Look, the payouts matter. The competition doesn't. You paid nothing to enter the competition. The payouts are it's the meat and drink. It's not. It's the competition's the thrill. The really this it really can. What matters is your own account, what you do, how you progress, and that stays disciplined and managed. That's the most important thing about trading. Trading markets, don't short oil at 100 coming. Look, I disagree with that. I like this setup, and this is a perfect example of my setup. I don't like the product, and therefore, would I be putting my hand in my pocket and putting this trade on? No. Right. Fried chicken, exactly. The one thing I would say is whoever wins the cup is a good trader, because let's just have a look. How many rounds you got to get through? It's not even round 8. There's another couple of days, because there was the first few days. 10 days of being profitable. 10 days. You've got to be good, but ultimately, consistency is the big thing. Again, but don't get me wrong. To be getting to day 5, 6, 7, and 8, you are a good trader. You have to have real ability, real discipline to manage the losing trades, to have the ability to spot the winning trades. Anyone who gets above, I would actually say day 4, you're good. First few days and going out in the early days, again, that can happen. Okay, Spudnik will scalp himself there. That's if the stress levels don't get to him first, but it's quite funny to watch. Hopefully he stays in for another day, because I think tomorrow these guys come back on stream, so it would be great to have another day or so of Nick going through the competition live on stream. It's great to watch. Right, he's always full of energy. He should have entered. Yeah. I don't like the consistency rules, so I won't buy any more evals until it's totally removed. Okay, again, I don't pay too much. I can't really comment on the rules. I don't necessarily trade them. So again, that's perhaps, I'm sure people are considering these things, but again, consistency rules are there for you to show them. Again, I don't want. Okay, right. I'm not sure. Sorry, Misty, I'm not really sure what the rules are on the thing. In fact, I really don't know, so I shouldn't really comment on it. But yeah, again, we'll have to see. But he's got a lot of work to do. One outlaw against, what is it, 32? 32 people remaining. One outlaw. The odds are stacked against him, but let's see how he does. How good historically are wars for the stock market? Not street market, but actual stock market. Jonathan, again, really good question. Typically, it depends on the extent, and it depends on the involvement of the country, really. I mean, the one thing we can say that wars are typically good for is politics. Again, I'm not saying that's why Trump went in, but obviously we're coming up to midterms. It just kind of felt like he was very easy to get into this scenario. But typically the war will weigh, Jonathan, typically the war will weigh on the stock market. But the thing that is disjointing what we're seeing in front of us, because in a typical world, what we would be seeing now is oil going through the roof, and everyone concerned, obviously defense stocks, etc., they would be doing well. energies would be doing all right. Well, actually, we're just seeing a little bit of a drop there in oil. We'll perhaps circle back and have a look at what caused that in a minute. But yeah, typically we would see stock markets trade heavy in these scenarios. But because of AI is like simply dragging the US stocks up. We look at some of these big names and how they've performed over the certainly in this last quarter. They've pulled the stock market up. It typically it should be sitting heavier than where we are now. But again, obviously the other thing. The war and inflation should be weighing on the stock market. That inflation is causing the fact that the Fed need to be looking at potentially hiking interest rates from cutting. We started this year expecting 2 cuts from the Fed. This war and inflation has changed that. So again, rates going up should push the stock market lower. AI is just bringing and pushing the market up through that. So again, how stock markets would typically trade, and this is the thing, things aren't always a given. Things like gold should be always get bought during the stock market, during a war, because it is that historically it's that flight to comfort. So during a war, we'd expect to see gold up, stocks down. But because of the way it's worked and the dollar has taken on, and obviously the implication of interest rates because of inflation, we now find the fact that we're needing the war to end for gold to go up. We need now it brings the point, what happens to stocks after, if we get this MOU agreed and things, there's an agreement on the uranium and all these sorts of things. How much does that push the markets up? I think about that a lot, and I genuinely don't know the answer. Does the market breathe a sigh of relief even? I'm not ruling out that we could see stocks down. I don't think we would. But again, I guess it will depend what AI stocks are doing in that moment, because they are swallowing this market up and driving it forward. Cool. Right, let's just have a look through here. Andrea, absolutely right. It's what I alluded to there. He wants a victory. He wants to say, look what I did, as we're coming into midterms, because obviously we're coming into midterms with energy prices through the roof. That's not good. That on a case can certainly, I certainly read it. It was about probably over a week, probably about 10 days ago, that his populism is dropping. And since the war started, his populism had dropped by about 20%. Again, I stay out of US politics. I'd stick to just the. But again, he needs a win now. He needs energy prices down if he's to do well in the midterms. Right, first time trading my hot war is going on really hard for me. Look, it's hard for everyone. It's hard for me. It's just a matter of just being aware. Like I say, be aware of the data that we know is coming out. If there's any big speeches, if Trump's due to be speaking, if you're scalping, just looking to trading 1 minute, 5 minute, 15-minute charts, be out of the markets. Take yourself away from that potential volatility. John, do I ever use Bloomberg Terminal? I do. I use it every single day and have done for decades. So that is where I typically chart. So when you see me struggling on these charts, it's because I'm used to using the Bloomberg Terminal. I really like it. I recommend it, but I don't know what it costs, but it costs a hell of a lot of money, and my firm pay for it. Right, almost only AI stock run the rally up, not even tier 1 stock. Completely right. Amirez, morning coach. Good morning to you. Right, oh, this looks interesting. Walsh is going to use trimmed mean PCE, I think it's called, where you discount the 15% of items that have rose and fallen the hardest. I think flat for trades is the base case. Flat for rates is the base case, probably until year end. I couldn't agree more. I do not personally completely agree. I don't think interest rates are going out. Obviously, for those of you new to trading, just to understand what that question means and entails. So Kevin Walsh is the new head of the Fed Reserve. The Fed Reserve Committee, made up of 12 people, their job is to decide the interest rate path. Kevin Walsh was brought in to Trump wants rates lower. It was thought that he was bringing Warsh in to get rates lower. Now, at this time, rates aren't going lower anytime soon. Inflation is pushing away from the 2% target, and therefore rates will not go lower. So this is the FedWatch tool, for those of you who aren't familiar with it, run by the CME. They interview big banks, funds, asset managers, and this gets a consensus opinion of what they think. Now, what this is telling us is that of these experts who have been interviewed, 1.6% of people believe there's a 98.4% chance we stay where we are at a range of 350 to 375. I'm a little surprised 1.6% of people think we get a cut this month, because we do not. Now, what's useful about this tool is it goes out every Fed meeting. So 17th, that's obviously when we get the next one, 29th, and the one after. And what you can start to see as we go, we start to grow on this side, the 375 to 400. This means 25% of the people think that by September, we will be up by 0.25%. If we have a look out to year end, 41% of people think we'll still be where we are. I'm one of them. And so is whoever said that. I can't remember who it was. Do apologize. But yeah, equally 40, well, slightly less, but fractionally less people think that we will have had one hike. 14% people think we have two. Now let's take it out a year from now. Where are we sitting? 22% think where we are, 38% think one hike, 26% two hikes, just 0.3 think we're lower in a year. But bear in mind, this isn't a market, but it moves, and factors like unemployment, inflation will affect this. And obviously, if the war ends, inflation will not immediately come under control, but will more immediately come under control. And then suddenly we'll see a change in shape here. The minute the market gets a hint that inflation could be controlled, then we see the expectation come down, and who knows, the next move could well be lower, but we do need an end to the war. Cool. Right, let me just catch up. Yeah, Bloomberg Terminal, only $32,000 a year. Yeah, hence why if I was trading my own money, I love my Bloomberg Terminal. I'm so familiar with it. I so use it. I know where everything is. I'm a creature of habit. But if I was trading my own money, would I spend $32,000 on it? Absolutely not. Again, it's wonderful, but I'll use it while I have the luxury of my company paying for it. If you went back like 6, 7, 10 years, I would absolutely say I have to have it, because you couldn't get the information that you have. But you guys have access to almost as good a data of research and data now that for next to nothing or very minimal. So therefore, I think retail technology and available software has caught up so much with bank software that it will start to squeeze on Reuters and Bloomberg, these big providers that all these institutions pay, just throw money at them. God, you try negotiating. I've tried negotiating with Bloomberg over our terminals. When you sit down and go, we've got 30 terminals, can you do us a deal? And they're like, no deals. And that's how they offer. Don't get me wrong, I'm sure JP Morgan and Goldman's, etc., are all probably cutting a good deal. I just never worked at a bank that was big enough to be able to do that. Yeah, take him as a right. Coach Song, you told me last time that the entry in the trend line 15-minute time frame. I would like to know if it's after the closing of the 15-minute candle closed, or once breaking the structure on the 15-minute. I use price filters. I do not use time filters. Now, at times that works in my favor. At times that goes against me. So again, let's just pull up a chart. See where Everything's going, everything's heading. So we can see Dow's still not doing much. NASDAQ, again, sorry, let's take this down onto 1 minute. That, you see what I said? That line, I was only phased if it broke the low. It didn't. It stayed in it just to the pip and came back up. Now, obviously, but yeah, sorry, going back to the question. When my trend line breaks and I'm in, okay? Now, I give, depends what I'm trading. If I'm trading like gold, I want to see it. If I'm trading gold, I want to see it 5 points through my line before I get in. Again, that gold line's pretty shite, so I'll get rid of that. But yeah, I do it on pips. So, because what I hate is sitting there waiting for a candle to close, knowing that I'm going to buy if it's gone through, and then suddenly it's done 20% of the move by the time I'm getting in. So, but I appreciate at times I'll get in, it will come back down, and all that's left through my line is that little horrible wick, and obviously I feel an idiot. But on balance, I personally have found that when I wait for the candle, I miss too much of it, and that harms me more than when I occasionally just get that single wick just sticking through and the markets come back within my line. But again, this is something for you guys to test and you guys to think about. I'm just saying my personal preference, but it's something that you guys got to think and apply the method that suits you the best. Yeah, absolutely. Bloomberg for price and swaps and things. There's so many things we need it for. Also, like reporting and stuff. We just run all of our client reports. They build. We've got models that sit within it. It's just for a fund, a bank, or an asset manager. It is kind of just a one-stop shop that does so much of what you need, and therefore is worth. Has AI killed off the Bitcoin trade? Look. I hold my hands up. I am nothing like a crypto expert at all. I'm not. I'll be honest. I was quite anti it for at least a decade. Now I'm kind of. I'd say I'm in the watch and see mode. I'm paying attention to it. Now, obviously, we can see. Let's just pull it up. I think I've got it in here. Yeah, I do. Like I say, I've been really, and it comes. You get this a lot professionally. If you're a trader in a bank, fund, etc., you're quite. We were all initially snobby about it. I'm just being honest. We were all like, that's not a proper product. That's not a proper product. But at the end of the day, it's a market, and we're starting to see banks structure products around crypto, because there is a demand for it. Obviously, one of the reasons we were snobby is because it's unregulated, certainly was unregulated. Now, our investors, I can't touch where I sit now. I can't touch unregulated assets for my clients. But ultimately, that hurdle can be overcome. So for now, I pay attention to it. I'm not like charting it up every day, but I am paying attention to where it is. I'm starting to, before you can jump into trading something, you've got to have an eye on it and understand, right, okay, if we get something that says it's bad for inflation, and every so often I'll go back and go, right, okay, we've seen a big move in stocks, in the dollar, in bonds because of this inflation data. What did crypto do? And that just helps me to start to build an understanding of how crypto. Boomer talk, I completely get that. But you are what you are. So, Siddharth, mate, I had no problem with that. By all means, few words doesn't bother me. Now, does institutions use special indicators, data that differ from retail confidence and aid your trades? Not at all. I would say in the predominance, they they're using exactly what you guys have. Obviously, they're building models, algos around strategies and things. Could I say that they're as good as what you get? I personally, because I'm so simple, I don't use them. So it would be unfair to really comment too far on that. But broadly, the availability to retail traders now is so good that you're pretty much seeing and have the same scope and ability. But don't get me wrong, they have the advantage banks funds have over you guys trading at home is the fact that they're a team. Yeah, this is a team of lots of individuals, but they're talking, they're learning from each other. That's the advantage these guys get, just to be quite honest and frank. Right. Yeah, the guy is gone. No worries. Look, there's always going to be one. It's fine. It makes no big issue to me. Yeah, no worries. So yeah, obviously, what Nick teaches how to play games more than trading. Look, there's a place for everything. Again, I don't think you guys need me to teach you how to play Wordle because it's the only game I play. I thought institutions mainly use a 50-day EMA when they move in and out, slow when retail move away faster, and when retail selling institutions slowly start to buy it up. Not necessarily. It's so broad and varied, Jonathan. I think to specifically pigeonhole what all institutions are doing, I don't think we can do that. Every single one, that I work in, members of the team are so different. They're not necessarily just looking at the move specifically around a moving average. There's so many different ways to analyze it and look at it. Again, we also have to consider a lot of the time when institutions are buying a lot, selling a lot, it's not always spec. It's not always proprietary. It's not always just trying to make money, just trying to trade markets. Very often we're seeing institutions come into the markets, move in the markets because it's client order flow. Again, it just we do have to bear in mind that a lot of the movement comes from just executing. Like I've sat in a bank. When I was there, my job wasn't just to make money on a day. That was probably 80%. That was probably 80% of my day. 20% of it was filling orders that come in from massive corporates, small corporates, hedge funds, central banks. Central banks call us up and deal through us. So again, we overlay the flow that we see with the technical analysis that we have. Again, that is just being honest. That is another advantage banks have because they get a glimpse of what other people are doing after they've done it. Because when that order comes on, just so you know, you don't. If you see, I don't know, Buffett's about to buy 100 million gold. Now, logically, in your head, gold goes up. So what you'd want to do is buy yourself some gold first, and then fill his 100 as he pushes it up. But you can't do that. Being honest, going back 15, 20 years, it was just market practice. But these days, you can't. You're not allowed to kind of front run clients' orders. But you'll be buying yours as soon as you've bought his. Okay. Right. Let's have a look. Done for the day, profit target hit in all my accounts. Russell Dean Harris, wonderful. And this is another thing, guys. Don't be afraid to be done for the day. If you've done what you needed to do, the amount of times I've seen people sit there, had a good day, really happy with it, and then they go, oh, I'll just put one more on. I'll just put another one on. And then before you know it, all that P&L's dwindled. And as I think I've said before, that drives me mad. Right, okay, so this has moved on a little bit. So now what I'd be doing is potentially looking at lowering. Can I just move this? I'd want my entry to be through here. Yeah, the stop, actually saying that, the stop, where would the stop go? Stop would have to go. The stop could go now below this low here. Risk reward is still decent, but I want my bias is probably to the upside, even on this short-term basis. So I would now structure it. So when you set these up, don't be afraid to revisit and make sure that just because you did it an hour ago doesn't mean to say it's right now. So I'll be keeping an eye on this. If we get an entry, a potential for an entry through this level, stop below the low, decent size risk reward, take profits not too greedy, it's not above the high, and then we just have a look. At this point, Trump better investor than Buffett. I mean, man, like, I think I went through this on Monday, but for those of you who weren't here then, Trump is trading 60 times a day. I don't trade anywhere near that much, and it's my job. Obviously, he's saying it's a wider team. Look, I'm not going to throw accusations at the president of the US, but it's a little bit fishy, to say the least. And I do hope these things are being looked at, because it's simply, I remember years ago there was an example. Let's just pull it up. Come back to my currency roots with this one. There we go. How far back can this let me go? So this is Euro Swiss. Oh, sorry. Here we go. Oh, we go. I don't need to go that far out. Where was I? I was on a month. Go on the weekly. All right. This is Euro Swiss. For years, the SNB, the Swiss National Bank, was protecting a level. Now, on this day here in question, basically, they were intervening in the market to, they were selling their own currency. So this is Euro against the Swiss. So they were supporting this level. One day they let it go and the market tanked. We went from 1.2 down to 0.9. Now in currencies, that doesn't happen. If currency pair moves like 1% in a day, it's a big deal. Now on this example, the head of the SNB obviously told his wife that he was, they were going to stop intervening, and we were going to see this move. Now the wife put a trade on and capitalized on this, and the guy lost his job, quite rightfully, absolutely quite rightfully. But when you actually look at what they made, I can't remember, it's so long ago now, but they made like £15,000, and the guy was probably on £250,000 a year, and he lost his job just for doing this. Now, if we bring that back to some of the trades we're seeing Trump doing, longing companies before supporting them by the government, like I say, it's a little bit fishy. It's a bit too much. Okay. Let's get back on the main ones you guys are concentrating on. So the NASDAQ, we're on a weekly on NASDAQ. That is pointless. So if we bring this back in, again, NASDAQ's just, I want to come up with an idea here, but there's just nothing there. There's nothing there for me on the short term on this. Arguably, we've got this line, and remember that was off the line off my hourly. We could perhaps bring that in a little bit here using this line. Again, it's okay. It's just okay. Okay. Right, let's have a look. When Nick came to, yeah, someone saying it was 1.2 forever. It just was, I actually gave up trading it in the end. It was just pointless. But the thing is, so many people were trading it. Sorry, I'm just talking about Euro Swiss when it was being capped at 1.2. People were buying it there and going, why wouldn't you? But when it went through, like, just to give you an idea, a lot of this was traded a lot more in Europe, because obviously being Euro Swiss. But in the papers, there was people who were just buying it at 1.2 because it seemed the most obvious trade, and their stop loss was below 1.2. but it gapped like 30% without trading, and people were trading leveraged. I remember reading a story about, it was a school teacher in Ireland who had a £2,000 trading account, ended up owing his broker £150,000. Now, obviously, because he was trading on margin, slippage, now it brought about, in a way, it brought about a positive change, because, well, it wasn't necessarily positive, but that's why these days you have to prove your level of understanding every time you go up in an account, because what they're doing there is asking you to prove that you actually understand what you're doing, because then if you lose a load of money, they can use that to say, well, look, you showed me here that you told me you understand what you're doing, therefore you owe me the money. But I think a lot of these people managed to get out. Oh man, you're living in France and earning in Swiss. Well, that was a lot better when it was at the bottom, but yeah, when they're holding a cap, which was squeezing your earning, that must have been tough. Cool, right. Yeah, Pelosi, but Pelosi got put through the ringer, kind of put a lot of pressure on her. Trump should, well, I think at some point something will come out on that. But anyway, that's a story for another day. So Edwin, I live in Colchester, but I work in London. I only work in London 2 days a week, hence why I come on and do these things on the days when I'm not in, just to kind of keep me focused, looking in at the market. Also, if I'm coming on here talking about discipline in trading, it makes me more disciplined. I'm living the life that I'm speaking. And also when I come on here, people say, have a look at this, have a look at that. It sometimes helps me point out. So I've just remembered right at the start, somebody asked me to look at the DAX. So we've opened up that little bit lower. Oh, Andrew. Actually, Dedham's lovely. Actually, I like Dedham. But I was based in Coggeshall, which you probably know, very similar village to Dedham. But now I live central Colchester. But yeah, just looking at the DAX here, obviously we've got the big gap on the open, but it's not a surprise really. Let's just take it back onto a 5 minute or 15 just to see a little bit more of direction. Again, not a huge amount. Let's just take this back out a little bit, which is something I often do, just to see, am I missing something on a bigger picture? But in this, no, not really. We don't really see too much. So yeah, I can see you guys talking about it amongst yourself. Copy trading, guys, anyone who's copy trading, try and get away from it. Learn from the person you're copying, that you're initially copying, and try and bring it on your own. Because if you're copy trading, the person can lose effectiveness. You lose them. Or say the person goes off for a week. Again, you're left. You're sitting there. You're not doing anything. It's about trading is about finding your own path, finding your own way, and getting. Look, like I say, taking a piece from everyone. I'm not saying take a piece from me. Listen to all the different people, Nick, Celine, in the afternoon, Spudnik, Rebecca, all these guys. Get involved with, see what people are doing, try things out, and see where you can get to. Kangsley, I really appreciate that. Thank you. Oh, well done for keeping the Reform riffraff out of Colchester. For those of you who aren't from here, Reform is a political party that's forming in the UK. I'm not a political person. I traded sterling, the pound for UK banks for like 20 years. So I had to try and keep politics out of my trading, because I found that politics gives you a bias. And therefore, when you're heading into things like elections, you start to trade your bias, and that's not healthy. That's not good. But I have real problems with Reform, and it's really, I'm not saying it's a racist party, but it's heading that way. It's heading on. It's on the furthest side of right. And thankfully, whilst the town I live in, quite a few people, and in the surrounding areas, this this kind of more far right party picked up a lot of seats and wins in the particular area I live in. It didn't, which I'm quite proud of. Right, someone's saying, how are you going to the World Cup to watch the Titan Army? It's really harsh. I'd love to go out there. I was at the last. Scotland haven't been at a World Cup for 28 years, and last time they went there, I went. So I was at the France-Brazil game, at the first game, and it was probably one of the best days I've ever had. But this time it's so harsh. Our games in UK time kick off at 11 p.m. and then we've got 2 games at 3 p.m. So that is just not as enjoyable. But yeah, I'll probably still manage to watch it. I don't know if I'll manage to squeeze a beer in, but when you watch Scotland, you kind of need a drink because it's never normally that good, especially if you're watching them play Brazil, and Morocco are good as well. In fact, I'm not even confident we beat Haiti. No, the World Cup. No, sorry. I've been asked in many of Scotland playing today. I'm talking about the World Cup. I think the World Cup starts, is it 11, 13, 14 days, something like that? Yeah. Just chatting away, the producer, Roman, panic that the World Cup's about to start and he wasn't aware. Okay, Amaris, yeah, absolutely. That's exactly the right approach. See something you like in spot someone's doing, adapt it a little bit yourself, so then you can pick up and lift off. And obviously when Celine's not there, you're still there. You can still think about how you adjust around it and build it out to someone who doesn't like talking politics likes talking politics. Look, you go. I don't like expressing a political view or trade. More to the point, I don't like trading a political bias. Yeah, Idris, you're up in Scotland. They are actually keeping the pubs open all night in Scotland for the games. That's going to be carnage. Scott McTominay is in form. Yep, I love Scott McTominay. He sounds as English as he sounds as Scottish as I do. And love that Delamitri song from Scottish World Cup. Don't come home too soon. I will never forget it. I was going to say I had it on record, but I think I've got it on CD. So again, showing my age from record, but I'm from CD, but even worse that I had it on record as well. Cool. Let's get back to the charts and have a look through these. Now this looks a little bit better. Now obviously we're on a 15, but I want to plot this because it is a good line. I'll plot this on here before we bring it in. Now I really like that. I really, really like that. This is exactly the sort of thing I'm looking for in terms of just setup. Sure. So again, where obviously the stop loss is nice and cheap. Can I bring that down? Yep. Stop above the high. Target, we can either be really ungreedy and take it here. To think we're going to see it all the way down there would be a little bit nuts. Obviously we're looking at a 15-minute chart here, so things are a little bit out, but it's not unfeasible. So again, forget the time frame. What I'm trying to exemplify is the setup. The time frame doesn't matter. It's what the setup has shown us. The 15-minute. So if we take this down onto a 5, again, I do wonder about the entry. Just for safety's sake, would it be better to put the entry down through that level? Again, it just gives me a little bit more comfort in, because what I don't want to see is us break the line, that candle, maybe even a candle forms below it, still not break that low and then reverses, and then afterwards I just feel like a complete clown that I hadn't waited for that low to go. So I may err on the side of caution and just look for that little bit more. Now let's take it down onto a 1 minute and just see if there's anything different in there. Fit to page. Yeah. If I brought it into purely the 1 minute, obviously this trade looks stupid now because it's not relevant. But on the 1 minute, we're still we're chopping about the middle. And for me, when we're chopping about the middle, that's not my market. My market is when we get the breaks. I have to be prepared to sit here doing nothing. I have to be prepared to literally physically sit on my hands. I have my lines. I have this type of thing. The bigger plan sits there. Again, when we're chopping about the middle, let that happen. That's not my market. That's not for me. Even when we bring it down into the shorter time frames, it's still showing me nothing. So again, I have to be prepared that will be, I just have to be patient. So let's have a look at this one now. So this is getting a little bit more interesting. Let me just delete this off. This is my long-term line. I know it's there. This is getting a little bit more interesting. So again, we've come down, we've respected it. We're solidifying this line. So again, we've got the potential to buy ahead of this line because it is respecting it. But again, as I say, I prefer the break, which means sometimes I feel an idiot when it bounces off my line. I don't care. I want the momentum. I want the explosion of the break. That's how I trade. Okay. Right. Let me just catch up. Cool. So going to be too expensive for pubs and bars in the Netherlands for the TV cost. Yeah, that's the downside of the World Cup, the commercial side. It absolutely kills and takes the enjoyment away from the true fans. What does Tradeify provide a motive wave platform in their prop firm account? I'll be honest with you, I don't know the answer to that. How are you identifying false trendline breaks in the NQ? Again, to safeguard myself from look, as a trendline trader, fake breaks are the bane of my life. They're the worst thing that can happen to me, but they're going to happen to me. But as I've kind of gone through, I'm looking at how much grace I give it. You've seen when I don't just trade on when a line breaks. I look for another supporting area around there. If it means it gives me an excuse to give it just a little bit more through the line, that's what I'll always do if I can find that secondary line. Again, here it's not quite so clean. I would probably trade through, just to mark this one up. I would probably be looking at I would potentially be looking a little bit more like that. That would be my setup around a break of this level. I'd want to see that low go. So yeah, this is definitely a feasible and tradable one for me. So this is the sort of thing. So if we go back through, look, trading's a bit like fishing. It seems weird to be long. Actually, it's not that weird to be long and Dow and looking for a setup for a long and Dow and looking for a setup on short on the Nasdaq. Look, at the end of the day, they're good trend lines. Trading's like fishing. Sometimes you've just got to have your idea, and just be sitting there patiently waiting for it. That is what we shall wait for. So these are the two I'm looking at the moment. Okay. Zoom in so tiny. Okay, sorry. Let's just go through. So that was the Dow, and sorry, I'll zoom in on the NQ. There we go. So you can see the entry would be through 30, well, basically 3,700, looking to target down at 3445 with a stop above that high there. So at every point, the entry is justified by a trendline break. The stop loss is is a good level. It's a previous high. I tried it a couple of times, 3 times, failed it. Therefore, it's a good place for a stop. So Jam, NQ, we're Celine and Nick. Nick is in Miami. Celine is moving to Greece. They will be back with you next week. G for Geo, I'm very well. I hope you're good yourself. Just typed a bunch of 3s and 1s in your keyboard just now. Oh, right, sorry. Do you ever add to your positions, or is it your full position entry? That is a great point, Kangzi. I do add to positions. It is something I would do, but there is one rule of me adding to a position. I will only add to a position that is in the money. I never add against me. And my other rule is I will never enter a secondary position until my primary risk. So let's just say off the top of my head, I was risking $1,000 on a trade. If I enter, let's just say I entered on a secondary level. So I entered on a secondary level, like below these lows here or something like that. Don't get me wrong, this isn't great. I wouldn't be doing this, but let's just say we had a few bases here. If we pushed through that level, I would enter in again, but that would involve trailing my original stop loss. So I would trail my original stop loss, and the one thing my second entry wouldn't allow me to ever exceed. So you see, I now have double the position, but I'm still just risking $1,000. So that's the rule I have for it. Firstly, only ever enter into a second trade if I'm in the money. Secondly, never risk more than the original trade, because if the first rule's ticked, I've got money in the bank. Okay, so therefore I can probably afford to trail that stop loss down, because trailing stop loss is something that I actively do. So I do add in. I talked earlier about gold, and over the last 18 months, adding in. Basically, I was adding into gold every 100 points, and every time. So I ended up with a trade that was 5 times bigger than my first trade, but I didn't do it like if you do it every 20 points or 30 points, then you're going to see that correction. But what worked beautifully was with that gold slow, steady move. I was constantly adding every 100, 120 points or so, but I was able to trail, and the trail was always, even though I was trailing, my stop loss was still like 120 points away, and it allowed me to breathe. It allowed the market to come against me occasionally without pushing me on. So, Lauren Hall giveaway. I'm not sure we're going to have one in these sessions. Not sure I'm trusted with the heights of doing giveaways, but perhaps we'll maybe have if Nick pops in later on. We'll see. Do you ever add positions? Yep, we've gone through that one. What's that? That's the exact opposite of Nick. Oh, so Nick adds in when it goes against him. Look, people do. I don't. Again, I don't. I'm just not a fan of it. I don't look. I'm a big momentum trader. I trade trend line breaks. I want momentum. The trend is your friend is the cheesiest marketing saying, but it's also the most correct. If the market is going against you, why would you put more risk on? In my opinion, if something's not working, don't do more of it. You add to something that's going well, because in that moment you can afford to. Again, like I say, I went at the point where I'm adding in, things are going well. I'm adding into something, momentum's with me. But again, look, you said, again, if somebody adds in against them, but if they found that way works for them, that's fine by me. That's up to them. But my principle is it wasn't just. Coach, how do you trade markets move this far towards all-time high? Because war, but why? Are institutions and big players not taking their profits? Look, Amirez, it's tricky. And we do see profit taking. Go back a week or so ago, we did see a blip. We saw come as some people started to take profits on AI. But in this moment, the buyers just outweigh the sellers, and we're not yet seeing that. I do think if we got some form of relief rally, if the Middle East MOU was agreed, obviously we'd see the stock market push on. I think if we saw another, let's just say 3-4% higher, we can't not start to see a bit of profit taking. And what we often see with profit taking, it can start to spiral. Because selling doesn't necessarily mean to say people want to go short. It means people are getting out of positions as well. And when these large institutions come with the large holdings, that can be significant. And then the market starts to have a little bit of a pullback, and suddenly things run away. And then what you typically see in this scenario is a day and a half of selling, and then everyone goes, hold on a minute. Hold on, it's got a bit cheaper. I can get back in again, and that's how the cycle of doing it in that way works. So, Jonathan Gooden, why won't I put as an outlaw? Good question. I'm actually not allowed to, and this is why I'm not showing a live account on here or anything like that, because I'm a regulated trader for an institution. I'm not allowed to trade anywhere other than that institution, and being an outlaw would tick that box. So I think I said it on Monday, perhaps next year my wife will join, and I'll maybe give her some tips. But yeah, no, I didn't say that. But I'd love to. It looks fun. But the one thing is, even though I'm a good trader, I back myself over any month, over any year. I wouldn't back myself to be winning it. I wouldn't back myself. I'd be really pleased if I got to the last 32, purely on the consistency basis. You can see every trade I've done, I'm looking for 3 to 1. The reason I do that is because I'm not going to get everything right. It's a tough market. I think the people who have got where they've got have done exceptionally well to trade well over that. What makes you a good trader is when your down days aren't that bad, and when your good days are good. And therefore, my 3 to 1 risk reward ratio allows me to, when things are bad, yeah, they're not great enough. It annoys me, but when they're good, my positive by far outweighs my negative. But also, please do bear in mind, 3 to 1 sounds great, wonderful in theory, but in practice, 3 to 1 trades present themselves far less. It's more restrictive for me to find a trade at this moment in time. On what we've been looking at on here, I wouldn't yet have taken this trade. But look, we're getting closer. I'm going to zoom in on this. Actually, let's just adjust it in this way. I would actually adjust that, because this is a 1 minute chart and it's evolving all the time. The line's coming lower. I've actually moved my entry lower because obviously the charts come lower, the trend lines come lower. So again, we're just flirting with pushing through this level now. So again, this is a trade I would take. Look, stop loss definitely in a good place. Entry definitely in a good place. Target not actually, I could probably even bring that down a little bit, because just to get it below that low, that high, because I don't want to be greedy with my targets. Risk reward ratio 3.2. It's ticking all my boxes. Again, in terms other things I'm thinking just in those moments before taking a trade. Is there anything coming up in this next little while that's going to disrupt it? No, there's not. There's the PMIs aren't unimportant numbers, but they're not going to. The French, Italian, German, Spanish PMIs are not going to be affecting my a trade in a 1 minute chart on the Dow. Okay, right. Let me just catch up a little bit. Selling before a previous high of the day. I don't really. Look, different things matter to different people. Previous high of the day, I've not found it beneficial to consider those. I just trade. I'm a trend line trader. I trade my trend lines. What other things that come in and around it don't affect me too much. So Nick has a strat that's, look, this is the thing. My strat is my strat. That works for me. That's great. Nick has his one. That works for him. Brilliant. That's exactly it. What I'm doing is expressing a preference and what has worked for me. But again, we can all. This is the wonderful thing about trading. We can all do things differently and still all make money over maybe not on the same day or in the same hour, but over a period of time. The way we all individually do it can work. Now, again, we're getting highlighted. My line is working. The market is respecting it and it's coming off. But at this moment in time, the setup for a short doesn't excite me. I don't like it. I want the market to come through, break this line, and kind of explode on. All right, let's just catch up. If you're in a trade with 3 contracts, how do you take out only one as trade is running and keeps on running? Brooke, I don't really know. I'm sure there'll definitely be a way from, I guess that's Tradeify you're using. There'll definitely be a way. On another session, ask that question and they'll definitely be able to give you the answer, because I'm not trading using Tradeify or anything like that. I don't know it, but I do know there will be a way to do it. whether it's whichever platform you're doing, just to allow you to kind of unload some of your position and roll the rest on. It's not a bad practice. Okay, guys, well, we're running in towards the last 15 minutes. So just a reminder, the Grand Cup is still going on. The outlaw left remaining is Sputnik, who will be trading his heart out today to try and push on. This will be an interesting day, down to the last 32. God, imagine these guys must be wiped out from the emotion, the adrenaline of being in this thing. If we have a look at rewards, I think they're on day 6 now. So again, we're at the point where, is it $5,000? I don't know if that's $5,000 for reaching 32 or $5,000 when you're in it, but getting through today starts to get meaningful as we start to move towards the bigger prize pots. But there's some people working hard. There's some people having a lot less sleep than they typically do as they get excited about the potential of this. But let's hope everyone who's in it is still focusing on the norm and trading well in what they normally do. Do I have Dagamara, do I have a set schedule on Tradeify TV, or do you usually just go spontaneously? I do have a few set points. So I'm on for the open on a Monday of the futures, the New York session. I'm always on, and I go on there to just give a run through what's coming up in the week. Payrolls. Somebody asked me about payrolls. That's what we're going to do in a minute. And so, yeah, I go on to that session. It's just about half an hour, 45-minute segment. Then on a Wednesday in US lunchtime, myself and Coach Ryan go on typically we're on an adjusted schedule this week. So typically myself and Coach Ryan are in at lunchtime, and that's a bit more of it's a coaching session. So people come to that. It's very much open, all questions. Again, we'll go through any questions you guys have. We'll sometimes set up, talk through trading psychology, talk about how me and Ryan are different. Ryan's a brilliant trader. He's not been doing it that long, 2-3 years, I think, and he's doing it exceptionally well. He's so technically in focus. So it's a good balance. You've got the age of me, you've got and you've got the kind of technology edge of Ryan. So it's quite a good balance. And then the other segments I do is before payrolls, I go on to Power Hour in the US session, and I'll give an overview of payrolls. I also do that for CPI and PCE inflation, where I just talk about what's going on in the markets, what we might see, how the markets might react to it. So again, this market is, but in a way, it's frustrating that the market's running away from my line. But you know what? It's also good because it means my line's valid. Okay. So at this moment, I'm constantly, as we come down through the line, I have to adjust this, because bear in mind, when we started looking at this, my entry was up here. That's no longer relevant. It needs to be down here. Now, I said just a moment ago, just a moment ago, I said we would look at payrolls. So here we go. Right, Friday. Now, let me start with my payroll story. So for anyone who's heard this before, obviously payrolls is it is the most volatile event in the markets in the month, really. And everyone gets really excited about it. And the worst thing that ever happened to me was quite early in my career. I had a huge day on payrolls, and I mean huge. At the time I was trading currencies, so currencies is a 24-hour market. So I'd had a position overnight, and it had gone well. Then I came in, nice bit of P&L in the book. Went right. I'll just put. I'm banking that much, but I'm going to risk a little bit more. Had a position in my London morning. Bear in mind, over here in London, we get payrolls at 1:30 p.m. I had a really good morning again. Came up to payrolls. I thought, you know what? I can't remember if I went long or short dollars into payrolls. I was trying. I know it was dollar yen, but I took a position into payrolls. Went perfect. Again, market went flying up. Took profit. Not only did I take profit, but I went, you know what? Often what we see when we see payrolls move, it goes so far and then it overextends itself and it pulls back. I took profit, flipped back down. Honestly, it just like, if you could write a book about a wonderful trading day, that was it. But the worst thing that happened was the fact that happened. I'd like an enormous day, still to this day one of my best ever days. What then happened? Every month when payrolls rolled around, I tried to replicate exactly that day again. And what did I do? Made an absolute mess of it. I was trading the number. That's not trading. Because what we've got to bear in mind here is we're getting massive bits of information out. So we obviously, this is what everyone's focusing on. This month we're expecting it to come in around about 85. 115, the last month was a pretty decent number. The month before was pretty decent. But so obviously everyone's eyes are going to be drawn to what comes out here. This is what's forecast. This was last month. Bear in mind, when we're trading, a good number is anything above 85. Your mind would obviously go, we want it to be bigger than last month, but we're not. We're trading against expectation. Expectation is a balance of what everyone is expecting. So a 90,000 number, albeit 25,000 worse than last month, is still a good number because it's above what's expected. Okay. Now the other thing to consider, we get the unemployment rate out at the same time. Potential for this to come in at 4. Expectation here is 4.3, but there are quite a number of. I was reading something from Bank of America just before I came on this morning. They're saying they're expecting that to be 4.2, and obviously average earnings are important as well, because if average earnings are really low, albeit we can have low unemployment, we can have high employment, but if people aren't earning enough money to match inflation, again, that's so. And also another thing to consider is we get a revision here. So last month was 1.15. Payrolls always revises. Last month it actually revised up, which is very, very rare. Normally it revises lower, roughly as an average. Normally it revises around about 20% lower. So we get 4 massive pieces of data. All eyes go on this. So what you often see with payrolls, we get a spike, correction, down, 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 up, down, and it can be all over the place. Now, to me, it took me, after that amazing day, it took me a couple of years to realize I was just losing. I looked at my performance on the day of payrolls, and even with a good day in it, I was down. And that day was really good. But so I actually took myself out of the equation. I knew if I sat at my desk, I'd trade it. I knew if I traded it, recent history shows it's gambling and I don't do well in it. I actually, on those days, I booked an extended lunch because I knew if I sat at my desk, I'd trade it. And history was telling me I wasn't good at trading it. So I'd book a lunch and I'd come back to my desk half an hour after payrolls, and then I can trade. Then I'm allowed to do it. So I've formed a rule that got me an extra hour in the pub, that protected me from doing something that historically I knew I wasn't good at, apart from that one day that spoiled me. So I do not advocate trading payrolls. I absolutely do not advocate it, because it's a massive gamble. 4 massive pieces of number, 4 massive numbers coming out in 1 split second. The market is just going to do that, and that will just chop us up. Even if you wait 5 minutes after the number, that's worth it. I take myself out for a little bit longer. I let the noise happen. But even if you hold off just 5 minutes, holding a position into payrolls, it's not even the odds of you making money on it aren't even as good as going red and black to a casino, because we've got 4 different things. 4, in my opinion: the average earnings, payrolls headline, unemployment rate, payroll revision, all coming out in the same moment. It's very seldom you're not going to get this sort of chop. So do bear that in mind. The other thing for me, when I was in a bank, so seldomly did we get slippage. And again, payrolls, you always got, even in a bank, you got slippage. I don't ever want to put myself in a position where I'm vulnerable to slippage. If I get slippage on news, then fair enough. If I didn't, and I'm talking about unscheduled news, then fair enough. But otherwise, we're just do bear in mind, payrolls Friday, it's a punt. It really is a punt if you're in it. I just think we want to trade smart. We want to trade with an idea, with a plan, and trading over this doesn't sit within that. Cool. So Javdeep, appreciate that. Thank you. Let's have a look. Many macro funds waiting non-farm payrolls to trade. I don't know. Even the algos struggle with payrolls when there's so much information coming out at the same time. I'm sure they've refined it down from when I last heard about these algos doing it, but I certainly heard that they were struggling with it. Okay, right, guys, we're heading into the last 5 minutes. So any last questions, things? Let's jump back on the charts. Sorry, I know compared to the others, I'm not as charty, but look, it's an opportunity to hear a different opinion. So let's just extend my line down a little bit. So when I'm sitting here, yeah, I may not be in a trade, but I'm constantly looking at where I can adjust this. How I can bring this entry down a little bit. All the while I'm improving the risk reward ratio. So again, to achieve my 3-to-1, I can now bring it down. So I'm now getting less greedy. I'm looking for less, still achieving a very good risk reward ratio. When a trend line breaks, what is my confirmation to enter? 1, the trend line break. 2, if I zoom in, you'll see I don't put my entry isn't on the line. I just want, so at this moment the line comes in at 7.1. My line is at 7.5. I've just put it like four above the line, 4 above where the trend line is. And again, I'm not waiting for the candle to close. The minute the price hits that line, I am in. So I would have an entry order at this level. And as you're seeing me move this down, I would just be tweaking my entry order on the platform, just looking for this to push in, break up and break on. Cool. Mo Flow, thank you very much for that. Really very much appreciated. Too early. Well, let's see. But yeah, let's just wait and see. Let's have a look. We had another one in the NASDAQ. How was that looking? Coming down. Obviously, it's coming down towards it. Let's just move this across. Again, I'm less in. This is actually an okay line. Yeah, no, I would take this trade. I'm having to, but the fact is, I'm having to think about it a bit more. Whereas the Dow trade would be. Let's have a look at the ES. That was on the. Oh, let's just delete this off. Coming away again. What are we on here? We're on a 5 minute, but again, we've got just this good trend line coming across the top. Quite a few touches on there now. Yeah, Cam Jam, the NAS does tend to just kind of dick around until we get brick scaler. Cool. No, thank you very much. I'm glad you appreciate it. I think tomorrow, actually, let's just have a quick look at the schedule before I disappear. How do I get? Saved it on my WhatsApp. Oh God, I'm sharing all my pictures. But yeah, today, New York, PB Investing. So just a solo stream there. And then with Terence Grady, so Mr. Curly Trader is on in the Asian stream. And then in the London stream tomorrow, you get Claudia. So she will take you for this same segment. And then after that, certainly the New York stream goes, New York and Asia goes back to regular schedule. And then Friday, I don't think there's a stream on there. Cool. So I've been sharing my thing. So quick flash of my dog, just because he was there, and I'm sure somebody noticed him. Oh, don't need that on there. Get that off there. Cool. Right. So guys, just before I go, things to watch out for today. I don't think I got to this. Oh yeah, we did. So today, Broadcom after the bell tonight. So for those of you still trading at that point in anything, Broadcom, I think Broadcom will be impactful. If we have just jump on and have a quick look at the what it's been doing this week, look at this movement. It's up something like 10% this week. So to think that when their earnings come out, we're not going to see movement, we most certainly will. So otherwise, other things to be keeping an eye on today, guys. Wednesday, we've got the ADP. ADP comes at 8:15 States time, and the ISM comes in at 10 o'clock. So services PMI, obviously the manufacturing segment we saw yesterday, that came out positive. It was a slight beat there. Cool. Okay, guys, really appreciate your patience. Some great questions, some great interaction today. Really enjoyed it. Perhaps I'll be back on this stream at some point. Who knows? Maybe just subbing in, keeping the seat warm for Nick and Celine at some point in the future. But I've enjoyed this session. It's a lot of interaction, a lot of people. Really, really good. So, okay, guys. Well, I hope you all have a very good day. For those of you who participate in the US streams, I'll be back for the US Open on Monday. So take care, everyone. Have a good rest of the week. Take it easy on payrolls. Remember what I said. It's a punt. We want to be structured and meaningful in our trades. Okay, guys, have a very good day. Thank you very much.